Hello again. Today is Saturday, October 26, 2024. I am Jason Shapiro with crowdedmarketreport.com. So we've gotten a bunch of people asking me recently to update sort of this Don't Trade Fade series that we'd be doing, where we took 4 portfolios at the beginning of the year and decided to track them and just see how they did against the market in general, with the idea that they probably wouldn't work, and if you faded them, you probably would work. So let's see how we did. The first one was the Barron's. So Barron's puts out at the beginning of the year this Barron's Roundtable, where they gather some of the greatest money managers as they see it, and they tally their stock picks, and they came up with 24 domestic stocks this year, which we then took and put an equal amount of money into each one. And this is the results. That portfolio has made 5% this year, while the S&P is up 22.5%. So they have underperformed by 17+% on the year, which means that if you had equally dollar shorted those 24 stocks and equally dollar bought the S&P against that, you would have a completely dollar neutral portfolio that is up 17% this year. And that speaks to what we're trying to say here. These are very well funded money managers with huge educations, CFAs, MBAs. They have teams of people working for them. They have these sophisticated valuation models that they go through, and they're just experts in stock valuation. And look what they did here. I mean, this is just a horrible return. And like I say, you're up 17% if you had shorted their stocks and just bought the S&P 500 with very, very little risk. You had no market risk there, so to speak, because you're equally weighted long short. 17%. I would argue that outperforms 99.9% of long short equity funds this year. In particular, long short equity funds that are equally long and short. And what did it cost you to do that? You didn't have to have a staff. You didn't have to have an office. You didn't have to have Bloomberg's. All you had to do was buy one week of Barron's. And you didn't have to do that because you could have gotten it online like we did. So it cost you nothing, basically, to create a 17% return this year that had virtually no market risk. Don't trade. Fade. The next portfolio we did then was we took, let me go to this one. 24, since we used 24 from the Barron's one, we took the first 24 stocks alphabetically, just try to be as random as we could in the S&P 500. And this random portfolio is up 9%, so it's actually beaten the Barron's experts. But it has still underperformed the S&P by, 13% or whatever, right? So again, that outperformed. Then we asked ChatGPT, give us 24 stocks for the next year. That one's done the best of all of them. That's up 17% plus. So that's only underperformed the S&P by 5% and has outperformed the Barron's Group by 12%. Just randomly asking ChatGPT, cost you nothing. Give me 24 stocks. Has beaten the experts. Still underperformed the index, but beaten the experts. And then the last one, this was the end of year CNBC Consensus. Looked at what the people on CNBC were doing. They give these picks for the year to come up. They try to do like a FANG type of thing, so they call them some name. And I took the consensus ones, that most of them did, and it came down to these 5, right? And that portfolio was up a little bit more than 10% in the year, so it was underperformed the index by 12+%. Again, beating the Barron's experts, but underperformed the random choices and way underperformed the index. So, I'm not here to make fun of these people. I don't know these people. I have nothing against these people. And I didn't do this after the fact. We did this at the beginning of the year and said, let's see how it does. And look how it's done, And the point I'm trying to make here is How are you? Let's take the Barron's people. These are the very well-funded stock pickers, like I say, with huge staffs and great models. How are you going to do a better job than them in picking individual stocks? Well, if you didn't do a better job than them, then you're probably not even up on the year this year, right? So very hard to, and these are people that do exactly what are sort of taught in securities analysis books, right? And in MBA programs and CFA programs, right? They're doing it the right way. They're doing it the fundamental way. And look where it's gotten them. That's the point I'm trying to make here, right? You have to figure out another way that you are going to get an edge in the markets other than this, which is what this is proving, right? This is no edge. This fundamental stock picking thing is clearly no edge. You know, the two things that did this on here were the Barron's and the CNBC thing, right? And both have underperformed grossly, right? So, you know what? Here's an edge. Just fade them. Like I say, don't trade fade. Just fade them. That's it. And you make great money doing that with very little risk. The risk-adjusted returns on this are through the roof, right? So just food for thought when you're thinking about how you're going to make money in the markets. If you are actively managing money, then you're believing that you're going to be able to outperform the index. Otherwise, you could just not actively trade money, right? Just put your money in the index. You're going to have to think about how you're going to beat these processes in actively managing money, because none of these processes worked, right? So, like I say, the best way I know to do it is just fade. Fade these guys. Fade all of it. And it works across the board. Doesn't take a hell of a lot of thinking either. It just takes a belief system to know that over time these people are going to underperform. I don't know if the Barron's people are going to underperform by 17% a year every year, but we're going to keep tracking this next year and the year after, and we'll see just how they do over long periods of time too. But this year's been a perfect example of just how bad this is, okay? So anyway, that's what I wanted to show today. I think it's kind of interesting. I hope it helps you get your thought process right as to how you're going to approach this stuff. And always happy to hear questions and comments, of course. If you like this video, please like it. Please check us out on Crowded Market Report, where we have a lot of other stuff going on too. We have a bunch of free videos on YouTube and Substack and all kinds of stuff. So check us out there if you like it. And I hope everyone had a good week. And we will chat again next week. Thank you.